Good morning. How is everyone doing this fabulous Wednesday morning? Wonderful. So I hope that we're going to have a few light bulbs and some enlightenment today, and I love the topic of business. So I am excited to kick off this full day of learning for you, and I'm sure that there will be some tidbits and some nuggets that I think you'll take away. So today, my topic that I want to discuss is designing financial success, smart strategies for more money now. Who would like to make a little bit more money? Okay, you didn't raise your hand. You're good. She's all set. This one too. She's like, I'm furiously taking notes. I am not interested in making any more money today. That was you. She wants to make. No, she's like, no. I want to make more money too. I'm like, count me in. So we're gonna have a little bit of fun today as well. Try to keep it interesting, and I'm on the clock. So we're also not going to lose my time today too. So we're going to be on the agenda, on point, and learn how to make a little bit more money. So a little bit about me. My name is Dwayne Bergmann. I came here from Southwest Florida today. I launched my firm in the Naples-Fort Myers market in 2013. I started off with myself and one assistant in the loft of my home, and I'm very proud to say that about 14 years later, we have just under 50 employees, have 2 design firms, and grew my business from literally one project to we have about 80 projects that we manage currently and do roughly about $25 million a year in annual revenue with the design firms. I'll show you a couple of other businesses that we're involved with as well and kind of how to maybe incorporate some of those. But very proud of what we have been able to accomplish. I do not come here from a traditional design background, so I also want to share that for any of those of you who maybe took a non-traditional path to your career. I have a business degree. I have a master's of business administration from the University of Florida. Sorry for those of you who are not a Gators fan. We're not very good right now anyway, so it's we're not shouting it out from the trees, but I'm still a devoted fan. I've been able to apply a lot of the principles and the experience that I had working in a corporate environment and from that business background and apply it to this industry. And what I want to do today is to share my personal experience, share some things that I have done that have proven to change the trajectory of my financial success. And hopefully you can incorporate some of those things in your own businesses starting tomorrow. Sound good? Okay. So last little thing, and I think this presentation gets pushed out. I've been very blessed to have some amazing acknowledgments, been published regionally and nationally. We've been in several of the lists that we all try to become a part of, and again, very fortunate for that reception to our work. But in addition, I want to point to a couple of the things here at the end, because these are some of the components that really impacted the financial impact to my business. So in 2022, I began the process of acquiring another firm, and we executed and launched that in January of 2023. So essentially overnight, I doubled the size of my current business. And that is a major way we're going to talk about how to grow. And even if you're a firm of yourself and maybe 1 or 2 other people, there are other firms just like you that may be ready to go through a succession plan, and it's a really fascinating way to get yourself exposed and maybe a little bit more involved in a different type or style of business that could complement what you're doing currently. So that was a keynote in here. One of the other notes I like to point out is in 2022 I launched a company called Luxe Millwork, which is and currently still is a custom cabinet millwork shop. And then you'll notice in 2024 I sold that. Well, this is one of the areas I talk about. If you're going to make mistakes, or if you feel like something isn't working, learn quickly from those. Make those mistakes, document them, and if something isn't working for you, figure out the best way out of it. And guess what? So that business was one that I launched. I was so excited about it, but it took so much of my time, my energy, and my resources that it was pulling me away from what I love to do. So it was on the financial side, and we're talking about the financial side today, it was a very successful business, but it didn't work for me. and it was really dragging me down. So I figured out a way to sell that business and still get some residual value out of it as it continues to operate. So for me, it was kind of the best of both worlds. So one of my other points that I make when we have these conversations is you can't be afraid to try. Maybe something is a little uncomfortable or you're a little nervous about it, but you also can't be afraid if it's not working for you to say, hey, I'm pulling the plug, and just figure out what the best strategy out of that is for yourself. And it took me about a year to unwind that business and still make it a good and a financial positive decision for myself, but we were able to do it. So I always want to reiterate that, well, everything's not going to work out perfect. Not all of my business plans worked out. This is a great example of one that, again, financially, it was a good business. Personally, it was an awful business. And the best thing that you can do when you run into those situations is acknowledge it and go, I'm not going to let one decision that I made take the whole ship down. So I always think with designers, we're so used to trying to achieve perfection, and we want to be perfect, and we want to make everyone feel good, and we want to make things look amazing, that we also sometimes take that perspective on our own businesses, and we get a little nervous about trying something that we're not 100% sure is going to be a slam dunk and a home run. Sometimes you just got to try. And if it doesn't work, know it, make a change, and get right back on the horse. So today we're going to start with our main objectives. So I have 3 big objectives. So get your house in order is exactly what it sounds like. If you want to grow your business, the first thing that you have to do is to have an extremely solid foundation. So what I'm going to talk about in this part of our program are all of the things that I think are essential that you really, really need to incorporate. And if you have some of these items that you're not working on today, there will be the things that I would say, hey, you need to address those first. Then you can start looking at additional possible revenue opportunities. And not all of what we're talking about is going to be applicable to you, but I think there might be 1 or 2 of the topics that you'll say, hey, yeah, I can go check that out and see if it would work in my business. And then last, I'm going to give you a few pointers on how to take action and start executing the decisions that you've made. So on the foundation part, there are a lot of operational processes that affect your profitability. And who in here loves operations? Okay, 1, 2. We have 2 people that love operations. And this is because we're all designers and creatives, and it's like, oh my goodness, I have to look at a report that's telling me information that I'm not even sure what it probably actually means. Or even if I do understand it, it's like, what's driving those numbers that my accountant or my business coach keeps telling me I need to worry about? So although it's not one of the most fun things for us to do, once you realize that a lot of what you're doing operationally is impacting the money that you're taking home with you, it might change the priority level that you give a little bit of the operations focus. So first thing I'm going to talk about is owning your business. You need to, from the very, very, very beginning, define your design process in your initial interview. And why is this so key? Because the only way to grow your client base and to grow the revenue that you're able to achieve from each client is from the very first meeting they have with you, they have to understand you're the professional, you're organized, you have a plan, you're the leader in this process, and you know how to execute and take care of their project to the nth degree. They are hiring you not only for your creative ability, which that's probably what most of us think we're getting hired for, right? We think we're getting hired because they love our portfolio. Kind of a maybe-ish, yes. They are, and that's true, but they're hiring you for competence. And the earlier that you understand that confidence is what's going to kill it in your bank account, and that doesn't mean being rude, and that doesn't mean running through people. It just means I'm going to show you that I'm well organized, I have a plan, and I know how to execute regardless of the size and scale of your project. If you start communicating that from the very beginning, your clients are going to be blown away, and they're going to say a lot more of the yes response to your questions, and I'm not so sure, and I need to talk to my 20 consultants before I get back to you to make a decision on what fabric you're going to use on your drapery. We're going to talk about contracting for success, identifying candidates who complement, that are not your replicas, and then capital planning and cash management. So we start our first meetings with our clients with an 8-step process. And I explain to our clients from the very beginning, we're going to go through this entire process in your project. Whether we're doing a bathroom remodel or whether we're doing a $45 million new construction build on the Gulf of America. So I caught myself on that one. I'm not sure what we're supposed to call it. The basin of water next to Florida where we currently live. So that I just honestly caught myself with that. I've never had that phrase go through my head before. But we sat down and we actually explained to the clients, this is our process, and we follow it. And because we follow this process, it allows us to be very creative because the process identifies where we are in the stage of the project. And whether or not this is perfect for you or not, having something that you're explaining to your clients that shows them that you've thought through every step of what needs to happen during their project, and then you back it up with things like, here's an example of, so I do this in my interview. I'm going to have an orientation agenda. Every meeting is going to have an agenda. This is what it's going to look like. Here's a sample of what we're going to review in these meetings. Meeting number 1, conceptual design, discuss floor plan options, discuss conceptual designs. Meeting number 2, we're going to go through and do your kitchen and great room design, bathroom layouts. So they immediately go, okay, he has a plan. He's going to take me through this process, and he completely understands how to get me from this set of plans that I just, paid thousands of dollars from my architect to the completion of this project. If you start your initial consultations with your clients with this type of plan, again, it doesn't have to be just exactly like I showed, but if you start that, you're going to instill confidence from day one. Always like to show just a few pictures of some of the projects that we're doing and have completed. It's always fun to look at. So once you get them into the point where they are going to sign a contract, these are some of the areas that I really, really, really want you to focus on. So first, are you doing fixed contracts or hourly contracts? Second, what type of contract are you actually proposing? We call them a proposal versus markup, and I'm going to spend a little bit of time on this when we get into the details. And then one of the things that we always contract for is we're not banks, so we want to get 100% deposits on all of our product in advance before we order it. So fixed contracts, how many of you work with fixed and hourly, or do you just use fixed? Does everybody use a combination, or where are we kind of split? Both, a lot of fixed? Okay. So with fixed contracts, you definitely need some historical information in order to not sell yourself short. So I would encourage you, even if you're using fixed contracts, to keep track of all of the time that you spend on your projects. I did a process for 5 years. I required everyone in my firm, and at that we were averaging, 21, 22 people in the firm. Everyone had to account for all of the time they spent at work, regardless of whether it was going to be billable or non-billable time, and to put it into the system. And I got lots of pushback from a lot of my designers, and I explained to them, look, I understand this is your Achilles heel of your week. However, I need information. So prior to completing that exercise, we barely did fixed contracts. We were mostly hourly because it was less risky. You're getting paid for the amount of time that you're putting into a project. Now, we would do things like give a range of amount of time that we would be spending on a project. Sometimes we would do not to exceed hours, so we wouldn't exceed this amount of billing with a client prior to reviewing with them, hey, we've exhausted the 400 hours that we discussed, and so we're going to need to talk about, we're going to need another 100 or 200 hours or whatever it might be. But without that historical data, you can lose a lot of money on a fixed contract. So if you haven't done that research to understand how much time you and or your team spend on different activities, you probably need to do that, because you could sell yourself short and realize that, wow, I should be charging this amount versus what I'm charging because we really are spending on an average this much time. And so people are used to spending, however much per hour in this market, and we're actually only getting paid this much per hour if you actually calculated it out. So you definitely need a little bit of history to get that right. So I kind of talk about price per square foot, not to exceed hours, a percentage of total budget are three of the ways that I think are safe to do fixed contracts. And when you move into hourly contracts, we found that most of the clients, they have a little bit more of a resonance when you're changing the design rate, so it's not one flat rate for every level of activity on a project. So we do have multiple set levels depending on the type of work that is being done. And I might even encourage you as a principal, if you're the only one billing, you might have a break between your creative design time and job site visits and interactions and client meetings versus the administrative work, because you do want to bill for that work. If you're inputting everything into the system for your proposals and all of the follow-ups that are required, but you might want to lower your rate for that. And it's just one of those little acknowledgments that your client's like, okay, you know what, they understand that it's a different type of work. And I'm not saying that that's a must, but it's something that we found that clients really resonate with. The last one is a retainer requirement. So I have a question. How many people collect retainers? Okay, a decent amount. How many of you allow the retainers to be billed against your monthly bills? Okay, so if you do, that's not a retainer, that's a deposit. So what I would suggest is immediately changing that. Your retainer should be a set amount that you keep until the very end of the project. So this is not something, if you're collecting a deposit, you need to change the language in your contract, because a deposit is where you're getting a deposit and then you're asking for that to be maybe re-amped every month or every 2 months as you're going through their money. A retainer is different. A retainer is kept to the very end. And you should set your retainer amount at what you think the average risk that you would have outstanding if you're hourly or fixed on a monthly basis. So if you've put the project plan together and you think, okay, I'm probably going to be billing $8,000 to $10,000 a month on this project, then your retainer should be $10,000. If it's a project where you think you're going to be billing $25,000 a month, then your retainer should be $25,000 a month. The reason you have a retainer is to protect yourself in the case that the client doesn't pay one or their final bills. So you'll have that money. Most of the time with our clients, we're actually refunding retainers back or portions of those so at the end of the project. So it might be something we apply, we're through the project and we have the final freight and install invoices and it's $3,500 and we apply the $3,500 and send them a check back for the balance. That's truly how a retainer works. You want those retainers kept for that possible instance or the final bills where you're not left chasing after your clients for those payments.
Can I ask a question?
Yes, please.
Okay. Regarding tracking hours of your team, what software did you use to have them track hours, or was it less formal?
No, so our company is utilizing Design Manager, and you can put your hours right into Design Manager. But whether you use Studio Designer or Design Manager, Asana and a couple of other programs, there are several apps that you can also use for time billing. I wouldn't do this manually. That's way too difficult. And there's some free apps, I think, for time billing tracking as well.
Can I ask you?
Yes.
So on your retainer, when you have a project that you're charging a retainer for, are you billing hours against that retainer, or are you just holding the retainer until the end?
You hold the retainer to the end. You should never bill against that throughout the project. The retainer should be applied to your final invoice when you're closing out the project and or refunding it back to the client because they paid all their bills in full.
Okay.
Yep. Great questions. So the second type, after we go through fixed contract, is the type of contract, proposal versus markup. And markup is typically referred to as a cost-plus contract. So again, I asked these questions not to embarrass anyone, so I hope you take that to note. So kind of by a show of hands, how many in the audience use a cost-plus type of contract? Okay, so about half of you are using cost-plus. This would be the one area that I can tell you from experience, you are truly, most likely losing a decent amount of money from your bottom line. I understand that this has been a traditional way of contracting in the interior design business and in our industry. It is one of my biggest platforms from creating financial success that you should abolish this. This is why the big, I couldn't make it any more dramatic. If I could have motion here, I'd be like X, 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 and blow the place up. Because you're giving away all of your hard work that you have done to create loyalty, vendor discounts, things like that with your vendors. And I think this is probably one of the areas in our industry where we lose the most amount of money. So I talk about that, and then I'm going to show you why. So a little bit of margin versus markup. So the first thing, if you think you're using a 30% markup and you're going to be able to have a 30% margin, that's where the math doesn't work. You have to have a 43% markup to get a 30% gross margin. So what does that mean? So if you take $100 times the 43% markup, you get $143, correct? We all follow the math? So then you take the $100 cost of goods and you get $43 of profit in your pocket. So you take 43 divided by 143 is 30% margin. You don't eat markup, you eat margin dollars. So you can't take markup percentages and put them in the bank. You can only take margin dollars and put them in your bank account. So this idea of markup, if you are going to use a markup, and all of the business panels that I've been on and all of the conversations I've had with multiple different business consulting groups, as well as looking at 13 years of data in my own firm and 40 years of data of the firm that I purchased in 2022, you need to have at least a 40% margin if you want to grow your business and to earn the way that you should be earning in this industry. That's a 67% markup. So if you're not averaging, if you're doing a markup, again, I go back to my statement, you shouldn't be doing markups in your contract period, but if you are, you need to be in the 67% range to have a 40% margin, because that's going to help you develop your business and to create financial success for yourself. So why do I we'll go on to the 100% deposit in a second. Why do I think that your cost plus is such a negative thing? So here's the example. When I first started, I did cost plus because that's what everybody else did. And I looked at lots of contracts and did the ASID research on contracts and, cost plus, and everybody was like, you need to share and be transparent with your clients and all this good thing. Well, here's the first thing that happened. My business grew, and I started buying more from a few vendors. Well, when you first signed up, you had a designer discount of maybe 30% off of net. So you're at a 0.7 multiplier or a 0.8 multiplier. Everybody follow me? Okay, well, I didn't even realize it, but the vendor just changed my price level because we had spent $300,000 or $400,000 with them that year, and they took me from a 0.7 to a 0.33. So I'm like, oh, well, this is great. I'm still shooting along with my cost plus markup, and I'm like, I don't understand why I'm doing more business, but I'm not making as much money. Well, guess what? So $1,000 product, you have a 0.7, it costs $700. You do a 50% markup, that's $350 of margin. You sell it for $1,050, right? So we're everybody's happy, and you sold this product for $1,050. Well, now I buy the product for $330. We'll use 300 to make the math easier. $300 is my new sales price. I'm still doing my 50% markup. I'm making $150. So I'm selling this product for $450, and instead of making $350, I'm making $150. I just cut my profit by $200 on one transaction. Apply that across your business, and as you grow, you're going to see your profitability to go down. Guess what else you're doing? You just took a product that the market generally accepts at $1,050 as a fair price, and you just sold it for $450. You just lost $600 of what the market is accepting as the price for that product, and probably what some of your other competitors, you're calling them competitors, but your colleagues would be selling it at, because they might not have that 0.33 discount. So even if on a fair playing field, you all are doing the same cost plus 50, the same product is being sold to another client at $1,050 that you're selling it to $450, and you just lost all this money, and you just deteriorated the value of this product in the market. So there are multiple ways of looking at that. What you could have done is, if you had a by proposal contract versus a cost plus contract, you're going to say, okay, I understand that generally the value of this product is $1,050. I'm going to give my clients a little break, and we're going to sell it for $1,000. Now, instead of making $350, you made $700 on this product. You just doubled your profit. The firm I purchased at the end of 2022, the beginning of 2023, was doing cost plus. We converted all of their new contracts, went through their the remaining contracts that they've had, and I've doubled their EBITDA, meaning the net profit. So at the end of your financial statement, the earnings before interest, tax, depreciation, and amortization, your net income, I doubled it with just by changing. Not just, there's another part of this that I'll talk about in a minute with vendor optimization, but a big part of that was just changing their contract. So if you're wondering why you're not able to grow the bottom line and you're doing cost plus, this is a big reason, because you're giving away your hard work that you've done by getting yourself deeper discounts from some of your most loyal partners. Make sense? When your clients ask, because they all seem to want to ask, what's your markup? This is what I respond to. Did you eat out this week at all? Anybody here eat out? Ready to go to a restaurant? Did you ask the chef to tell you how much he paid for that steak before he put it on your plate? Like what? Wait. No, I need to know before I order that. Forget it. I'm not ordering that filet until you tell me. I need to know, are you doubling your price, tripling your price? You're only making 20% back in that kitchen? No. Anybody buy a new car in the last few years? Did you demand from the manufacturer to know what that cost was when it left the manufacturers before it went to the dealer? Because if you don't know that cost, you're not buying the car. And so I throw this back in kind of this, jovial way to my clients, and honestly make them feel like this is a ridiculous question. And then if they still push it, I say, okay, before I take you on as a client, I need to know what your profitability is. How much money do you make? Because if you want to open up your checkbook and your savings account and tell me this is how much money you made last year, then I'll show you how much money I made last year. But they're not going to do that, because that's a really, kind of irrational thought process. But this is one of the few industries where clients seem to think that we owe it to them to tell us what our profit is on a product. Frankly, it's absurd, and this is one of the things that is one of my platforms that absolutely needs to change. There are also, we don't have time today. If you have other questions for me on why, I can explain 1,000 different ways on why you should not do this, and why it's actually a liability and a risk as well for you to have this type of contract. Yes.
So do you just charge like a fixed, like what we're doing is give a proposal for your time, but still doing the markup on the goods and services as well. You're just giving.
We in our contract, it states that all products will be presented to you via a proposal for you to approve and acknowledge. And that's it. We don't talk about markups. The word markup or cost plus doesn't exist anywhere in my contracts.
I guess I'm saying like in the back of the house, you're still selling it at a markup.
Absolutely.
Yes,
But we establish our markups based on market value, not by a standard markup.
Right.
So, and I'll talk a little bit about that in a second. Absolutely.
So your proposal has, for example, sofa for the living room, $30,000, whatever. You have a line item that you come up with the number.
Correct.
Okay.
That's it.
Do you give them the specifications, like it's a Lee Industries, blah, blah, blah?
Sometimes.
525?
So, I mean, I wouldn't get into that specific of a detail, but a lot of times they'll want to know exact fabrics and things like that. And if they ask the manufacturer, we share the manufacturer, but I don't spell out, this is a Baker sofa with this cravat fabric on it or whatever. We just say, 80-inch, the specifications go by room, and it'll be like 84-inch sofa, bench seat, tufted back, contrast welt, things like that, so they know we've got all the details. So like the generalized specifics, exactly. It's a great way of terming this. Yes, sir.
How does that change with hospitality versus residential, or any nuances between the two?
Yeah, hospitality, your FF&E budget is going to be much more set. And this is definitely geared more on the residential side. On the hospitality side, you're probably going to have to acknowledge and I actually do my hospitality a little bit different. I don't want the risk of all of the purchasing, so I do my hospitality with purchasing agreements where I'm making a percentage on the FF&E package but they're paying the manufacturers directly, simply because most of the time when I do a hospitality package, it could be a $5 million package, and I don't want the liability if there's a major issue from a manufacturer that now I've got to, I'm on the hook for $5 million of product. So a little bit different in that regard versus the residential side where, you're usually not dealing with where if you had one chair, you bought 3,000 of a single chair and there's a manufacturing issue with that chair, what are you going to do with it? It's a lot different if you're doing one sofa and you've got, an issue with that sofa. But yeah, so I definitely have a little different plan when it comes to the commercial hospitality side than the residential. So 100% deposit on products. How many of you take deposits versus requiring all of the money up front? Anybody? A couple? Okay, so I understand this, and this is an additional kind of a standard that this industry has had. I changed this quite a while ago, and when I explain to my clients why, they understand. First, you can't order anything online today without paying for it in full when you order. It doesn't matter if it's showing up 10 to 12 to 14 weeks. So this has become much more generally accepted in our society. But the second is I've had multiple scenarios. I had a 34-year-old who passed away during the middle of a project, and we were only halfway through the project. Thankfully, in that scenario, we had required 100% deposit, but his estate was tied up in probate. It may still be, because again, as a 34-year-old, it was an accident and all this good stuff, but what do? You have $500,000 of product sitting with the manufacturer, and you've only paid 50% of it, or $250,000, unless your markup was 100%, so that you collected the full $250,000 and you're only paying $250,000 for the cost of goods sold. You're now responsible because you've signed the purchase orders, not the client with your manufacturers. So that scenario, I have also had, with our demographic, we've had a few other individuals that have passed away during their project. I've also had clients that have gotten divorced or separated during a project. And guess what? That's a nasty place to be in when now all of the accounts are frozen for a period of time and you're not getting paid. So mitigating risk is one of the ways when I talk about your operational success. Mitigating your risk is what you need to do to make sure that you're never exposing your financials and your financial security because of your business practices. Lastly, on this is how many we all think our clients are going to pay and we end up chasing. It's that one or two invoices we chasing. We're not collections agents and we shouldn't be spending our time. We're not getting paid to do that. So that's the other reason. We just stopped. And on the firm that I acquired, this was probably her, because she had run the firm for 40 years, it was probably one of her biggest anxiety aspects of changing our contract. She's like, my clients are really going to have an issue with this. We've only had one client that said to her, if I didn't know you, I wouldn't continue with this new project, but because I know you, I will. And then I had a conversation with them and explained why. And they said, you know what, okay, that makes a lot of sense. We understand, things happen and you need to protect yourself. And I always say, look, we don't have the markups that we would need to make to completely protect ourselves from a deposit, you don't want to pay that level. So this is actually a benefit for everyone. And to that end, people have always asked me, like, does this limit your ability? I've taken a $1.8 million deposit check for a project, our payment in full, and without blinking an eye, it's like that's what your project is. That's what this round of proposals cost. And they wrote a check, and 4 months later, the product arrived, and they're super happy, and we've gotten a lot of business from them.
So flipping that script, like from the client's perspective to you, like you're saying, like you're dealing with client divorces and deaths and stuff like that, so you're trying to mitigate your liability. So from the client's perspective, how do you convince them that you're not going anywhere?
Yeah, so I mean, we have a brick and mortar and experience, and I think that is part of it. If not, then what you also need to explain to them, and I'll get into that in just, I sent a couple of slides, but you need to have separate bank accounts as well. And I'll get into that level of detail, and I think when I show you that, and I explain that to clients, it helps them understand what's happening with their money as well. And that's one of the good ways. Again, it's showing that you've thought this through, and you're confident about how you're executing it, and that confidence transfers to them when they're writing a check for you. And even if they need an acknowledgement and things like that, the orders are placed. I mean, you can get acknowledgements without pricing on it to provide to your clients as well. Yes, ma'am.
Why did you say don't accept credit?
Oh, sorry. Yes, I don't accept credit card payments because in the middle of custom orders, clients can call the credit card company and cancel their order. So especially American Express. And this is what has happened to me in a couple of scenarios where clients have gotten, they're separating, getting a divorce. I actually had one client that got relocated during the middle of his project and tried to do this with his custom rugs. Because as you guys know, a custom rug can take 6 months, right? So you have a $50,000 rug that they paid with on a credit card, and all they have to say is the product was never delivered, and Amex will rip that $50,000 right out of your account without notice. And then you're like, okay, what happened here? And then you have to go back through and present all of the documentation and all this, and they won't pay you most of the time until the rug is delivered. But then they will pay you. But you could be out that money for several months on the credit card side. Yes, ma'am.
What payments do you accept, just check or ACH?
Yeah, we do check, ACH, wires. Those are the only forms, and cash. We have a client right now that wanted to pay their $10,000 retainer in cash. So, okay. I haven't had that for a really long time. No, you don't know that. This is my husband and business partner, Kyle. And no. Okay, note to self: different bank account, different safe. I'm seeing China in his, and not the country, dinnerware. Yes, ma'am.
When you're factoring in your deposit for your product, are you factoring in shipping and handling and receiving costs and stuff into that? Or do you bill that later?
So we actually, in my two different firms, we have two different processes. So I had always originally billed freight, shipping, receiving, and installation at cost without marking that up. So we billed that after and applied it again to the retainer if it was towards the end. And the reason I did that, because I couldn't figure out with a lot of our product is custom made, or we bring a lot of product in from Europe. And so it's very difficult to have all of those numbers and figure out a percentage that would cover all of that. Now, my other firm does, the majority of their work is just, and I also work, half my work is in Florida and half my work is in other states or out of the country. And so it makes it a little bit more challenging to figure out, like we have a project in Curacao, we just finished 2 in Toronto, we've done South America, Europe. So it's very difficult to say, okay, I can give you a fixed freight. But my other firm, Freestyle, we have a flat freight rate. We charge 15% on all products across the board. It doesn't matter what it is, and it actually works out. It's been able to cover all of the shipping, receiving, and install. But that's on everything. A light bulb is 15%, a wallpaper is 15%, something that gets picked up locally. It doesn't matter if we picked it up at a local accessory store, it's getting a 15% charge. You have to charge it on every single item in order for it to work. You can't leave out anything. Otherwise, you're going to lose money on that. So kind of, I know that doesn't answer your question exactly, but the real answer is it depends on the type of clients you have. For freestyle, it works because they're in a set market, and we know that this works. If you're working in multiple states, definitely if you're working in other countries, you really need to just say we're going to charge you freight, shipping, and install direct as it's billed to us. Yes, ma'am. Lump sum at the end of on our proposals. So everything goes through the proposals, and at the end we have the whole shipping, freight, install line, and then sales tax. So it's a lump sum at the bottom. So they see it as a separate item. Yep. Great questions. This is my princess bedroom I did for a client. It was really fun to do. So moving into growing your business, you're going to need to have resources. And one of the things that I see frequently with designers is that we end up hiring people who are like us and think like us. We need to hire people who complement, not duplicate our strengths. So if you're making your first hire or one of your first couple of hires, you need to know who you are and identify your skill set. There are lots of leadership assessment tools that you can use, the Strengths Finder. Understand your style, understand what you're good at and what you are not so good at. And then go out and hire for the skills that you don't have. And it's gonna feel weird, and you're gonna be like, oh, I don't even know how to ask those questions. If you need to make a phone call, if you need to call me, if you need to call someone to help, do that. But hire your opposite, not your mini-me. This is one of the biggest mistakes I see in trying to grow your business. And then as you start to grow your team and you want to identify additional team members, you gotta do the same thing and understand the skill sets of every person that's on your team and understand what you are the areas that you're trying to grow and what do you need from a skill set in order to grow. Capital planning and cash management. How many of you guys think about putting money away for growth? A few of you. I like this. This is great. This is something that a lot of us forget about. So first, you're going to need a line of credit. Again, kind of show of hands of how many people actually have a line of credit in place. Okay, this is good. So you got about 30% of you have a line of credit. If you don't have one, you need to apply and get a line of credit before you would ever need it. So it's going to be much more difficult for you to get a line of credit when you need it than it is when your business is stable and everything is rolling and you're not trying to grow. So I always tell everyone you want to try to get somewhere between 10% of your gross revenue or 50% of your average accounts receivables that you might have at any time. And identify that value and go to your bank and say, hey, I want to establish a line of credit. This is going to give you a little bit of flexibility if you find an opportunity that you want to pursue to grow. This is to your question you were asking about earlier with your clients wanting to know, like, okay, I'm giving you $1 million, what's happening with it? Operating, product, and sales tax bank accounts. So if you only have one bank account that you're currently utilizing, one of the first things that I would suggest that you do is to split this out. So we currently have like, I think 4 different bank accounts. I have an extra one that we use for some investment pieces, but I separate the accounts out. So first, your operating account, this is where all of the money is going to come in to that account. You immediately need to take out your sales tax. So sales tax needs to have its own separate account. You can do payroll and sales tax if you have more than 1 or 2 people in your firm. Payroll and sales tax can sit in the same account, but at a minimum, you need to pull out sales tax. If you ever get audited, they can go right into that account and see what's happening. Whatever you're collecting on sales tax, it's not your money. Additionally, you should have a product account. So you're going to know what your purchase orders are. So if you have let's just say a $300,000 proposal out to a client, and we're going to say you did 100% markup, so it's easy math. So $150,000 of that is your cost of goods sold. That's what you've got to pay vendors. That $150,000 needs to come out of your operating account and go into your product account, because that's where you're going to pay your vendors. So you set all your vendor payments up out of this product account. Then you're always covered. Then the remaining $150,000 in your operating account can be used for your overhead cost and some of the expenses that you have, as well as, you know, paying yourself eventually, hopefully, you know, some additional dividends outside of your salary. Yes, ma'am.
Will you be able to provide this via our PowerPoint slide to us later?
I think so. Yeah, that's fine, right? Yeah, we can set it up. Yep.
Put it up on our website too.
Yep, we'll send it out. Yes,
So
ma'am.
you said operating is where you pay yourself from.
So in my operating account is where eventually any dividends that I would pull out would come out, because that's telling me, okay, at the end of the year, I've covered all of my liabilities and payments, and this is kind of what's left. Or if I want to invest in something, that's telling me I've already taken all of my sales tax, all of my product costs, and then I know what my, you know, my monthly overhead is. And, you know, as that accrues and you get a little bit more built up, and you're like, okay, I've got this much money left in there, and that can be my personal money that comes out. Yep. Yes, sir.
What financial systems are you using to manage?
So we still use Design Manager as our official accounting system. We don't take it out and put it into QuickBooks. We're keeping all of the accounting in Design Manager. We spent a lot of time on getting your house cleaned up, so I'm going to run through these. I've got about 12 minutes left, and I want to have some time for additional questions, and we might need to take some of those questions during one of the breaks as well. So I want to give this enough time, but also this is where it can get a little bit fun in trying to figure out how do we grow our business. So the first is vendor and purchasing optimization, vertical integration, some of your passion projects, and then platforms, and then licensing. So when I talk about vendor and purchasing optimization, this is the area that I feel like all of us can immediately impact our bottom line. This is not a, hey, I need to figure out another line of business. This is looking at what you're currently doing, identifying your top vendors, identifying other vendors that you utilize, and then say, look, I need to move. I need to, you know, maybe stop spending as much with a few of these that I'm only doing $5,000 or $10,000 with a year, because I've got 7 vendors I do $10,000 with a year, and I've got 2 vendors that I do $200,000. You take that $70,000, you put that into the other, and now you're $250 with one and $220 with the other. You're a lot more valuable to them, and you can go to them and say, hey, I need to work on my, you know, my discounts and my buying power with you. So volume equals discounts. It also equals service. So it's also not always about, you know, changing your discount, but what's the service level that I'm getting? What happens when I have a damage? What happens, you know, when we need to see exit shots coming out of the factory? So you're able to really impact the bottom line when you become a little bit more loyal to a certain number of vendors. We look at our terms and our discounts every 2 to 3 years. And go back and make sure we're reviewing our vendors. So this needs to be at least an annual process, and every 2 to 3 years that you're diving deep into this to get into it with and having conversations with your vendors. If you're a single entity, one of the things that I've started talking about, and it's starting to gain a little bit of traction, is to maybe think about purchasing through a larger design firm or creating a small group within your small firms and say, hey, you know, maybe I buy $500,000 a year, maybe you buy $500,000, maybe you buy $500,000. Together, if we're buying $1.5 to $2 million together, we can go in and maybe say, okay, one, we can qualify to be open with some vendors, and in some other cases, we can negotiate to a different tier level as a group.
How would you, so from that perspective, how do you navigate that from like, okay, so you, me, and him are all in thing, so you pay your bills, or does one person pay all?
You'd have to set it up where one person is paying all of the bills and would have that administrative capability, because the vendor isn't going to want to have 3 clients. They're going to want to have 1 client, and you need to present it as 1 client, because that's your benefit to them, right? They're managing 1 client, not 3. Now, they can ship to 3 different addresses because they ship to different places all the time, but from a order entry and a servicing, it would be under 1. And that's where I'd suggest maybe making a fictitious company, and you guys all participate in that. Yep. So vertical integration is another area where you can start reviewing and looking for options to grow your business. So find where you're spending the most money. So this is how you identify different revenue streams. Look at your P&L and where do you spend a lot? Maybe it's you're buying hundreds of $1,000s of window treatments. So maybe you need to look at opening a window covering workroom, say, or partnering with a window covering workroom, so you can start sharing in those profits. That's how I got into the millwork business, by the way. I was like spending hundreds of thousands of dollars on millwork, and I was like, let's do this. And it was over a 10-year period of time, so it wasn't just an overnight thing. And again, financially very successful. It just didn't work in with my passion and my long-term projects. But there are lots of different areas. I think if you start looking at where you're spending money, maybe it's wallpaper, maybe it's tile, and say, oh, let's get a little bit more involved in these areas. And then also look at where you're getting your major referrals from, or where you're also referring clients. So one of the things that I was talking to some individuals, and they were constantly referring in their market people to property managers. And so they opened a little property management company on their own, because they're like, you know what, we refer 20 to 30 people to property managers every year. And then we have to kind of deal if it works out or if it didn't work out. And there's like, okay, it didn't take that much effort to hire 2 people to run their property management company. So that's where you think outside the box a little bit and think about, okay, where are people asking me constantly for referrals? That's gone to house cleaning services, paint, wallpaper. I've seen some individuals become general contractors as well, because they've decided, hey, we can start that as additional vertical option as well. I'm going to glaze through this. We talked a little bit about margin prioritization. When you are looking at opening another business or another revenue stream, this is where the markups, we're so used to thinking about markups, you also have to think about what the margin is. So the cabinet business, for example, is one where I like to talk about this down here. A 10% markup on $300,000 is putting $30,000 into that business, versus a 100% markup on a $10,000 sofa is only giving you $10,000. So you're selling it for 20, you're making 10, you're thinking, okay, well, I'm so used to markups, 100% markup, and so you might not think about another business opportunity. So this whole point of this is when you're looking at growing your business, our mindset of cost plus and markups, you kind of have to set that aside a little bit and think just a little bit about more, what's the margin dollars coming in from these options? So look at your P&L, identify large payables, look at who you partner with and say, hey, maybe you can go buy in with one of those. Also look at your space. If you're leasing, you might want to say, okay, how can I move into a place that I can purchase at some point, and then start creating your real estate portfolio as well. And then we talked about the referrals, and staging and rentals is another one. I was at with a group in Arizona, and a couple of the design firms, they were making some really nice money in addition to their design clients doing staging and also renting out some of their inventory that they had loaded up over the years from returns and things like that for events. So I think some fun opportunities to grow your business. We all have passion projects. Those are also fun ways to figure out how to develop. So maybe there's a niche product that you would like to see in the marketplace. Getting involved with the contractor to do some different types of spec homes for maybe Airbnbs and things like that, where you get a little percentage of the ownership and some of the revenue down the road. Art and accessories. I mean, there are lots of ways that you can create a few art pieces and speak to some of the companies to get those produced. So again, just little ways, if you find out what you're passionate about and pursue those as different revenue options. Creating a platform for yourself. This is one of the examples. I have a business background. I love talking about business. I love trying to enhance and help everyone grow their businesses. So that's a part of my platform. You might have a different perspective. Develop it and pursue it and go after it. Become a specialist. Find out what is your why. Why do you like doing something on a daily basis, and figure out how to maybe incorporate that into a message with your audience. And then one of the last things we'll talk about is licensing. this is what we all seem to want to gravitate towards. Licensing is the least amount of revenue that you're probably ever going to generate. And I'm very fortunate we have over almost 100-piece collection now with Abner Henry. You do those things because you have something you want to express, not because you think this is going to be your new big bank account. Because our industry probably pays the least royalties of any industry that's out there. So I'm running out of time. The last topic was, how do you make all of this happen? So again, I'm happy that we're sending this out, and again, I'm happy to answer questions, but define your timeline, create a plan, identify the amount of time and resources required, the amount of capital, and then I always talk about what I mentioned in the beginning, is it's okay to fail. So plan for your worst case scenario. If it doesn't work out, then document it, learn from it, and try something else. And you'll figure out that, hey, this is, we don't always have to have A's, and we're trained that we have to be right 9 out of 10 times through our academic process. You only have to be right once. Like, you can try and try and try, and if you really look at a lot of leadership books and books on and TED Talks and things on inventors, they'll have 1,000 failures before something will be successful. So don't be so hard on yourself. It's okay if something doesn't work out the way you originally planned. Just dust it off and start over again. So I wanted to leave you with what I've been able to build over the last 13 and a half, almost 14 years. So I have the Bergmann Company is my main holding company. My operating companies include Dwayne Bergmann Interiors, Sustainable Designs, doing business as Freestyle Interiors. We have a marble import company called Unique Slabs that I go to Europe and select different materials to come back over. And then we have a company called DB Homes that Kyle and I have started together. It's doing business as Bergmann, Barrett Bergmann Home. And then I have real estate. So I have 3 different real estate properties that are part of our real estate portfolio as well. So you have to put a plan together, create a plan, and identify, okay, here's how I can start pulling these, pulling different areas, and just stick to it. And if you have any questions along the way, I'm happy to be a resource, and there are lots of other professional resources out there in terms of business coaches and financial coaches. But you're doing one of the hardest businesses in the world as interior designers. You play so many hats. And if you're successful doing what you're doing on a daily basis, trust me, there are lots of little side opportunities that you can do. And with a little bit of resources and time, I think you can make those successful as well. Anybody going to High Point Market from here? Okay, so if you're going to High Point Market, I would just, little encouragement. Abner Henry is located on MLK, just to the left of Bernhardt. Would love for you to stop by and see that collection. They're showing about 25 of the pieces that I've designed, as well as some of their other pieces. If not, check out their website and you can see the full collection. Barrett Bergmann Home, we are to the trade, specifically and only. We don't have any of our product available direct to consumer, and there's no pricing available to any consumer. We'd love for you to stop by and see us. We're at the in the IHFC on the main floor, just before the escalators in aisle 2. So we'd love for you to see that, or check us out at shopbbh.com. And then I'll leave you with this is some of the slabs that we brought in from Unique Slab for a project. This was a kitchen that we did out of the millwork company, and a few of those photos. And all my contact information, I'm happy to answer any questions that you have along the way, and feel free to text or email or call.
Thank you so
Thank
much.
you.
That was amazing.